Well, good morning, everyone. Welcome to my channel. Welcome back. First, let's go over some order of business. First, like and subscribe to my channel. You should see on the right side, you should see a red button. Click it. Subscribe to my channel. At the bottom, comment, like, subscribe. Tell me what you like. Tell me what you don't like. Comments are greatly appreciated. For today's topic and conversation, we're going to be talking about REITs. What are REITs? REITs are real estate investment trust. So this video is for individuals that they want to invest into real estate, but as we know, you could be a real estate mogul guru, have over thousands of millions of dollars. If you have the money to go ahead and buy properties and physical properties, go right ahead. But for the individuals who are just beginners and want to invest into real estate, but at the same time don't know how to get started, this video is the right video for you. So for individuals who are curious about wanting to invest into real estate but don't have $1,000, you can invest into REITs. What are REITs? REITs are basically a portfolio of real estate. And why is that important? Why should you invest into REITs? REITs are a total return investment. They typically provide high dividends plus the potential for moderate and long-term capital appreciation. Long-term total returns for REITs tend to be similar to those of the value stocks and more, and return lower risk than bonds. So typically when people invest into their portfolios, they typically, wink, wink, they have bonds in their investment portfolio, some cash, stock equities, and REITs, real estate investment trusts. Looking back on it, REITs have very low correlation. And basically what it means by low correlation is that when things go up, it goes up a lot. But then when the market goes down a lot, it goes down, but it doesn't goes down as much as high betas. And also REITs, what you tend to see, because I got a couple of examples of different REITs for individuals to be able to invest into. What you'll find is that REITs, the dividend yield is over 5%. So you're really not even caring about the actual returns of the real estate investment trust that you buy, because you want it for income. You want it for the high dividends and to be able to live off of, and not only just live off of, but also diversify your portfolio. It says, who invests in REITs? Currently, approximately 150 million Americans live in households that are investing in REITs across the board. So these are 150 Americans that don't have the financial means to invest into physical real estate, but they invest into REITs, and you get that same exposure. So why not, right? Why invest into real estate when you can invest in REITs? But at the same time, if you're making enough money, buy real estate. but if you want real estate on a discount, REITs is the way to go. What is a REIT? REIT, or real estate investment trusts, are companies that own or finance income-producing real estate across a range of property sectors. So basically, it's a way for you to invest into real estate without having physical real estate. Individuals who have real estate, they have the physical physical property. Like for me, for example, I have a house, so I have a physical house that gains in value, and you can write it off and do a depreciation. And individuals who buy property, or who buy commercial property, they're able to, a wide range of benefits of just writing things off, depreciation. But a lot of times, if you don't have the money or the network to buy those properties, whether it's residential or commercial, then how can you increase your net worth, right? How can you get into real estate? We all know that real estate is one of the primary ways to increase your net worth and move into middle class and upper class, right? So REITs is definitely the way to go. And why invest into REITs? REITs historically have delivered competitive total returns based on high, steady dividend income, long-term capital appreciation. And then, basically, people invest into REITs is because if you don't have enough money to actually own out a house or multiple industrial buildings or commercial property where you're making million dollar deals, then you can buy REITs in your portfolio and then still have that same exposure to real estate. So why not, right? Okay. Lastly, I have top 10 real estate investment trusts you should be able to write down, look into, and add to your dividend portfolio just to give you exposure into real estate. I know you guys been excited about this. You're like, okay, you talked about REITs. You told me what it is a REIT. You told me why I should buy a REIT and give me exposure to real estate. Okay, give me some examples. Okay, one example is Crown Castle. Crown Castle has a 4.28% dividend yield with a price of $146.41. And basically, Crown Castle owns and operates and leases more than 40,000 cell towers. Can't go wrong. Another one is American Tower. American Tower, it's another REIT. Has a 4.81% dividend yield. It costs $222 a share. This also deals with this one also deals with the communication and wireless towers as well. So American Tower and Crown Castle are the same. So I know you're like, Cadero, these are nice and whatnot, but I don't have $22 to be spending on different REITs. Well, I have a couple more examples of REITs that uh, less than $100 where you can also invest into and get exposure to real estate. Kilroy Realty, KRC. This is $38.22 with a 5.65% dividend yield. You can buy this in your uh, taxable account. And this is basically invest into like office properties, is in the name, right? Simon Property Group, SPG, has a dividend yield of 6.07% with a price of $100, $118.63. This one is basically investing to like shopping malls and whatnot. Uh, I wouldn't really recommend buying SPG because what COVID really showed us is that a lot of times as consumers, we have gotten away from actually going inside of malls and shopping centers and really buying stuff online like Amazon, but it has a healthy dividend. But it has cut its dividend within the last recession. So uh, here's an option, but I really wouldn't go for this. Agree Realty is a REIT that pays monthly with a 4% dividend yield, $71.81. This and Realty Income. Realty Income is the dividend paying stock. It's known for it's a dividend aristocrat. It has increased its dividends over 25 years. It costs $64.74. This is the darling of the investing community. If you look at any investing video or any topic of compound interest on a monthly basis, something reliable, go with O. If you choose any uh, real real estate investment trust that I would say that just pick one and just go about your business. I would say it's O. It's tested, tried and true. It has increased its dividend for the past, honestly, 53 years of dividend raises, dividend increases. So it raises dividend roughly like 2 to 3% per year. Not so much, but at the same time, when you are in retirement, this is a great stock to have to give you exposure to real estate, but also consistent dividends and consistent income. Lastly, uh, VC properties. Properties you invest into um, Las Vegas, a lot Las Vegas casinos and the gambling and really hot. I go to Vegas all the time, and this has a 4.87% dividend yield with a 8.3% dividend growth with a price of $32.04. Uh, one is real estate investment trust that I like is Pine. It only costs $19.10 with a 5.76% dividend yield. I plan on buying this and putting it into my Roth IRA. This definitely will read it would definitely diversify your portfolio. I'm going to delete this. And lastly, a WP carry. It costs about $80.92. I have roughly 10 shares of this, and I buy about $100 worth of WP carry per month. I love that 5.26% dividend yield. It really only increases dividend about 1% per year. It's a high yielder, but I need some high yields in my dividend portfolio. And so, as you see, no matter what, it's been growing. Even if it's just 1% per year, 1% dividend increase on a 5.2% dividend yield, I'll take that because I have other dividend stocks in my portfolio. So overall, here are the top, I want to say 9 or 10 dividend investment trust that you should be able to just do research on and buy. I recommend uh, getting into this so that if you don't have the real estate exposure, buy this and hey, you'll be set for life, honestly. And then once you're able to make more money, then you go ahead and invest into physical land and real estate and commercial property. All right, guys, that's all I have.